features is the ability to track key events like the non-farm payrolls release. You can see here we've got the event feature. We're looking at US labor market report, and we can see that we can look at any instrument over the course of that report. And in this instance, I just decided to look at the dollar-yen pair, but we could choose S&P 500, the dollar index, euro US dollar. It's really up to us to choose. So right now, the market has been really focused on dollar strength. We've been seeing seasonal strength to start the year due to some tax-related flows from US corporations, as tends to happen most years. So the data out this week for the US has been mixed, and the non-farm payrolls print will be crucial in setting the tone for the US dollar to end the first week of 2024. So will we see dollar yen gains in keeping with the seasonal event bias? Look here, the dollar yen over the last 10 years has gained on average 60% of the time for a 0.09% average return. So there is a bias for the upside in the 2 days after the US labour market report, and on the day after you can see that it's around 50%, but if you extend it out to 3 days you can see that moves up to that 57.50 winning trade percentage. So there is a bias for upside in the dollar yen with the non-farm payrolls. The key print we'd look for to see more upside bias, we'd look for a headline coming in above 225,000, unemployment rate below 3.6%, and then we'd be looking for the average earnings. Ideally, we want to see them coming in sort of around, if they were 4.2% or higher, then we could see some more upside in the dollar yen. This is the most important release of the week and not one to miss. The major trade risk here is obviously the data, and the dollar yen will be moving mostly in line with the data and what that tells us about the path of US interest rates.